Back with closing trade and tracking the last lap of the market for the day. It's been looking good for the Nifty ever since the get-go. Yes, we did see that slight blip towards the midday mark, but we once again recovered. And we continue to be above the 25,600 mark, albeit now it's likely only nominally. So we'll see what happens in the last half an hour. But we have Mr. Ambareesh Baliga, independent market analyst, joining us on the show to make us or help us understand the market better and give us a better sense. Mr. Baliga, hi, good afternoon, and thank you for your time. Let's start by talking about some consumption names. And I don't mean your core FMCG consumption, but take a look at something like a Nykaa or something like Trent and the way they've perked up in trade post their earnings. Very healthy moves coming in. First, let's start with your view on Nykaa, all the overall discretionary consumption space, the beauty and personal care space, and quick fashion. What is your take over there?
No, I think beauty and personal care is one space which is really growing too fast in India and expected to grow at this pace at least over the next couple of years. Looking at the sort of millennium, who are actually coming and consuming these goods. So that's going to continue. So something like a Nykaa, yes, although the sort of increase in profits, what we are noticing now should have come earlier, but then at least it has started coming now. So I think there would be interest in like in a stock like Nykaa even going ahead. But Trent is something where I'm not that positive even now. I mean, despite the sort of numbers which you've seen, because there are a couple of things as far as Trent is concerned, which is creating that caution as far as I'm concerned. Because I think like in this quarter we have seen better numbers basically because of that cost cutting on manpower, technology upgradation. I think this is already done. From here on, I don't know. I really don't know as to what is going to save the bottom line, because the same store sales growth is, I think, would actually keep pressure on the stock even going ahead.
Okay, so that's the take on the quick fashion or the BPC space in India, and Nykaa being a play on that. A good set of numbers coming in. The stock is up more than 6%. On the flip side, let's talk about a stock that's deeply under pressure today. That's Transformers and Rectifiers India, locked in lower circuit despite them despite them announcing an order win, of about 104 crore rupees just a few minutes ago, but no change to the stock at all. 20% lower circuit for that stock, and multiple reasons here at play. One is their earnings, and the second is the order coming in from the World Bank, wherein the company has been barred to bid against any project since till FY29. So some reasons that are weighing on the stock. Let's take it across to my colleague Kanishka, who's joining us with a breakdown of these weak set of earnings for the quarter gone by for Transformers and Rectifiers. Kanishka.
Yes, Transformers and Rectifiers India is in focus today after reporting a very weak performance for the quarter gone by, that is fiscal FY26 second quarter. It has seen a sharp profit and margin decline along with rising cash flow concerns. Now, the consolidated revenue that came in at 460 crore rupees, that's down about 13% sequentially, whereas the net profit that has halved to 33.9 crore rupees. EBITDA has also seen a drop of 42% on a sequential basis to that 52 crore rupees level. Margins, on the other hand, they have seen a sharp decline to that 11.2% level from over 16% in the last quarter. Now, the big worry this time is on cash flows. Now, despite reporting profits, operating cash flow turned negative at 108 crore rupees in the first half of the fiscal, that is H1 of FY26. This was mainly due to higher inventories and receivables. Now, inventory that rose 42% year on year. Receivable days, they stretched to 97. That's pointing to delayed collections and a slower execution pace for the company. To bridge the gap, the company relied on borrowings with financing inflows to about 70 crore rupees, signaling tight liquidity and rising working capital pressure. So yes, that's the reason why the stock is in focus, and the street is now going to watch the management's commentary on margin recovery, cash conversion and working capital control, as these factors will be crucial for sustaining growth in the coming quarters. So yes, that's the reason why Transformers and Rectifiers India is in focus. Cash flow concerns weighing on the stock.
Thank you so much for that, Kanishka. Ambareesh, let me come to you. You're looking at this space, Transformers and Rectifiers. You've got large order books. Execution, of course, starting, or rather this quarter was a bit of a challenge. Management commentary awaited as to what's playing out. But this EBITDA to free cash flow conversion, which is not happening, Is that a concern, or do you believe that that's a one-quarter problem and therefore at this stage could well be an opportunity to buy? It's been a multi-bagger over the last couple of years. So trying to get your view.
No, that's true. It has become a multi-bagger because power ancillaries were expected to do extremely well. So the sort of numbers which have come clearly is a shocker. And cash flow is a concern, no doubt, because you've seen inventory increasing as well as receivables. And we can't really say that this pertains only to this quarter, and we may see that vanishing in the next quarter. I doubt that because that generally takes at least some time. So unless we start seeing those positive cash flows, I would say possibly just hold on for a while, because despite this, sort of a fall which we have seen in a normal scenario, we could have said that the weak performance has been discounted. But here, I think I would like to at least wait for a quarter or two more. And the other issue is the World Bank ban. I think that will keep the pressure on for a while longer.
And Ambareesh, sorry, a follow-on to that. Translate lighting also very similar space. The stock is down 12%. You reckon it's just because of the kind of numbers which have come out from transformers and rectifiers? And is this a company-specific problem, or do you believe that this could well be a problem across the sector?
No, this can be a problem across the sector.
Okay.
So I think it will show up for most of the other stocks in the same space.
Understood. And that makes complete sense as to why even Transray Lighting is facing the heat today, 12% lower on that counter as well. Kunal, your take on the technical front on a couple of these names, really seeing pressure today?
So transformers rectify is something which I don't track, so I'll skip that.
Sure.
Harsh.
And Transray Lighting also?
Yeah, I don't track that.
Okay. Fair point. Okay. Ruchit, do you by any chance track any of these?
So, transformer rectifiers, we have already seen a downtrend in the stock. I think 1 week ago, the stock breached its 200-day exponential moving average support. And from there, we have not seen any kind of recovery happening. In fact, it's not just today's trading session. If you look at last 3-4 trading sessions, the price decline was already backed by high volumes. And whenever we see such volume-based selling, stocks could tend to underperform for short to mid-term. So overall trend
of numbers, you have a Nalco, for example, which is up 9.8% in trade. A Krishna Diagnostics is up 7.7%. A Torrent Pharma is up 6.5%. Now, we've spoken about a couple of those stories, but Ambareesh, let me take a quick view with regard to metals and Nalco in particular. The numbers were standout. We spoke with management as well. They continue to drive growth, for the size that they are at. And what's your sense with regard to where the stock price is currently? Give us a sense on how you're looking at valuations. It's been a multi-bagger since maybe the COVID lows,
Right.
when the stock was at 30 rupees a piece. We're currently seeing a near 9-bagger on something like a Nalco. Give us a sense on how you're looking at it.
See, one is the performance, which has been extremely been good.
Yeah.
And now, if you're talking of aluminum prices, clearly, I think there's some more upside as far as aluminum prices are concerned. So that should show up in the next couple of quarters. And valuation-wise, not really expensive as yet. Although it's become more expensive than where it was earlier, but still, I think valuations is decent, single digits. So I think we could see possibly another 20-25% sort of a move over the next 1 year or so.
That's on nalco working space. Take a look at IndiCube, for example. Good set of numbers coming in. That stock is up 6 to 7%. WeWork on the other side was up 3% in the day, but has lost out on all of those gains. Your take on this new form of real estate, if we can call it that, on the commercial front, and where do you think the future of these shared spaces is going ahead?
No, share spaces, clearly the demand has been increasing year on year. Only thing is we have not yet seen the margins improving. I think that we should see possibly over the next 4 to 6 quarters. So from that point of view, I would be decently bullish on these stocks. So I think any sort of a correction in the market should